Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. As an investor, I'm always looking for great deals on the market, and there are 4 stocks that I think are really attractive right now based on their future revenue and earnings growth and also the valuation that investors are getting today. So that's what I'm going to cover in this video. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content and turn on those notifications so you know when a new video comes out. The first stock I want to cover is Spotify. This is the audio streaming company that is known for music streaming, but really its future is in advertising and podcasts and other forms of audio and video. And you can see here from this chart that the company has really grown tremendously over the last 5 years. And remember, this is really the company that created a business model that allowed music companies to move into streaming. What I think is really impressive of late is that it's taking market share from bigger companies like Apple, and that's really proven what a solid business it is. What we haven't seen quite yet is the company really start to monetize the advertising business from a margin perspective the way that I think they will in the future. Advertising is growing faster than the industry growth rate right now, so that's really encouraging. But costs have been relatively high, and that's in large part because the advertising segment of the business includes a lot of costs that come from podcasts. So when Spotify pays a big check to Joe Rogan to have an exclusive podcast on Spotify, for example, that gets allocated to the advertising side of the business. So that's why we're seeing relatively low margins in advertising, but that is shifting going forward because Spotify is basically exiting the exclusive business. They're going to really cut back on that. They've also cut operating expenses. So we should see margins improve in the future. And I think the flywheel has really started for Spotify. It has a giant business in music, transitioning that to podcasts, and now you're starting to see more and more video show up on the Spotify app as well. So those are really positive trends. And if that advertising business does start to churn out 60-70% gross margins like we see in a lot of other big ad tech businesses, this could be a very profitable business in the future. That's why Spotify is one of my top stocks right now. The next stock is Taiwan Semiconductor, and this is the world's most valuable chip fabrication company. Taiwan Semiconductor doesn't manufacture all of the equipment that it uses, but it's really the end manufacturer that companies like Nvidia and Apple work with when they design their own chips. They're doing the ultimate fabrication. And that's why this is such a growth business. It has a lot of tailwinds behind it. And you can see from this chart here that it also has extremely high margins and positive free cash flow. That's what I love about the business. And given the amount of capital that it takes to build the plants that the company has, I just don't see anybody knocking Taiwan Semiconductor off from this perch right now. There are also tailwinds from new businesses like artificial intelligence. So that's going to help the company grow in the future, should also help with margins. No matter who is growing in artificial intelligence, I think that's really the key here. Even if companies are making their own custom chips or they're building on a company like Nvidia, Taiwan Semiconductor is going to be making those chips. So that's going to be great for the business. Revenue did slide a little bit in the most recent quarter, but this is a cyclical business. We know that, and that should be expected. Long term, this is going to be an absolute growth play, and I love the position that Taiwan Semiconductor has right now. The third company is Topgolf Callaway. This started with Callaway, the golf manufacturer, making clubs and golf balls and stuff like that. That's not really all that attractive business to me. But what is the Topgolf business? So these are the location-based entertainment businesses that really make golf fun and sort of new for a younger generation of people. You can go there, rent a bay, hit some balls for a while, and get some food and drinks. It's sort of a new kind of entertainment, and I think that's going to be a real growth market just overall, and Topgolf is really leading the way. The company has already said that cash on cash returns for new facilities is about 50%. So from an investment perspective, each new facility that they build is going to be extremely profitable. As a result, they are putting a lot of money into those new facilities. That's why free cash flow is not very positive right now, but growth is really tremendous. And I like the optionality that Topgolf Callaway has. This isn't a company that just has to be about golf. You could be using the facilities that they have with Topgolf for any kind of sports. And we could see the company move into virtual reality even more than it already has, augmented reality. There's just a ton of options for the technology the company has built. And when you go to a Topgolf, the technology is kind of hidden because it's just part of the experience. But there's a lot of tech that goes into tracking the balls and everything that goes into scoring at a Topgolf facility. But that translates to not only other golf facilities, but other sports as well. That's really where the growth opportunities lie, is in expanding the business beyond just golf and the facilities that we see right now. And over the next decade, I think we're going to see a lot of that. Management has teased a little bit of that, but particularly as things like virtual reality and augmented reality become more common, more headsets come out, I think that's going to be a bigger and bigger piece of the business. So keep an eye on that, and that's why I like Topgolf Callaway. And the final stock is General Motors. This is an old legacy automaker, not necessarily all that exciting of a business for most people, but trades at a really attractive valuation, about 7 times earnings right now, generating positive free cash flow. So that's a solid core business. But what I really like is the company's about 80% ownership stake in the company called Cruise. That's the autonomous driving company that's building a ride sharing both vehicle and platform. They're operating in 3 cities in the US already. And I think this is the kind of business that could be ultimately far more valuable than General Motors it's in the future, depending on how quickly it scales, how quickly regulators approve these vehicles. It's coming out with a new vehicle called the Cruise Origin later this year. It's already in testing in the US. Should be on roads later this year for commercial operations. And GM has said that they expect to have 1 million Cruise Origin vehicles on roads by 2030. That's a big lift and that's a lot of growth. But even if they miss that by a wide margin, having hundreds of thousands of autonomous vehicles building a ride sharing platform could be a really attractive business. So that's what I like with General Motors. You're getting a value stock and you get the upside from a company like Cruise. Really just a lot to like there. So the 4 stocks we talked about today: Spotify, Taiwan Semiconductor, Topgolf, Callaway, and General Motors. What do you think about those 4 stocks? I'd love to hear your comments in the comment section below. Don't forget to subscribe to Rev Investing. Thanks for watching, everybody. I'll see you here next time.